To whoever I told on Twitter I would lead this video with a backflip, it's for you. Oh yeah, what a day. Before I start this video, I don't want to talk about this, but I mean, I guess for the people that missed it, I'm gonna be talking about the Super Stonk ban. But if you don't care about that, I'll put a timestamp on screen right here for you to skip towards for the actual analysis. It'll be brief, don't worry. So long story short, I got banned because of like a video I posted 5 years ago on my YouTube, which I took down today. Basically in the video, I was like with a few friends, and mind you, we're like 14, 15 at the time. Like we're high school freshmen, like being degenerates, trying to blow up on YouTube for doing stupid shit. And we're like taking our shorts off at a trampoline park and like jumping around. It's basically the video. Stupid, like really stupid. And I guess like someone dug it up, and yeah, like that's like what led me to getting banned, whatever. The only thing that like susses me out about that is like the timing of it, because it's not like I posted that video like a few weeks ago. Like this was like 5 years old, like very old video that like even I like forgot about. And so I don't know, the timing of it's kind of weird, you know, right after I post that DD going over price targets and why I think we're about to, you know, really start ramping it up. But you know, enough of that. I don't really care. The people that care about my analysis and like check in frequently to see what I have to say, you guys are, you know, I assume most of you are here now, so hell yeah. Enough of that rant. None of that even matters. You know, stay the course, ignore the drama. But yeah, onto the analysis. So let's talk GameStop first. This video actually might be kind of long because there's a few things I want to go over. So first of all, where do I even start? Which count is it? This one? Okay, let's start with this one. Okay, so I guess bull case first. In the last video analysis I did, I outlined that if we are still impulsing and we're not in a corrective wave, we wouldn't break below this level at 171.6, which marked the supposed wave 1 high, assuming it was 1, 2, 3, 4, and then 5 up from there. But because we broke below that level, that signifies that this whole move was just a wave 1. Assuming we bottomed earlier at 167-ish, you know, assuming that's the low, then this would be a wave 1 up, and this whole move would be the wave 2, which wave 2, remember, is a deep correction on all time frames. You know, I don't even know what degree this would be. I think this would be like sub-minuet, you know, like intraday scale. That doesn't really matter. But bull case is wave 1 up, and then wave 2 is in right around here at the 0.786 retrace. If there is more downside, next level being 169.4, basically anything above 166.79. So I hate to do this, but let's pull up some basic technical indicators, because, you know, I do like to have anything that really supports like my point of view, what I see. On a 1 hour, we have MACD starting to, yeah, and actually never mind, this doesn't really help me at all. I take that back. But again, yeah, assuming, actually, we didn't quite tick the level yet, so that's not a requirement. You don't have to hit the level to a tick, but usually you do. And so, let's say tomorrow, if we are about to hit the low of a wave 2 before exploding into a violent wave 3, this wouldn't be the tsunami. This is still in a larger degree wave 1, in which we correct again before, you know, really starting to move. So, I guess outlining that, it would kind of be like, let me pull up like a daily just because there's more time on it. It'd be kind of like 1, 2, 3, 4, 5 into a wave 1. That's larger degree wave 1. Wave 2 down to here, and 3. That's where we start to really explode. So I wouldn't say we're there yet. We have a little bit of trading left to do. I'd say like a week or so if we have bottomed here. And again, I have a lot to go over, so bear with me. This might be kind of long, but let's just assume. Let's play devil's advocate's the wrong way to phrase it, but let's just assume we bottom today. That would put preliminary wave 3 targets from here at, let's clear these fibs, clear that as well, take these off, put preliminary wave 3 targets at let's just say 190, 189.5, and 201. It's interesting that 201 number actually coincides with like the upside of this larger wedge, so I guess there's some congruence there, but again, I don't really like trading off these alone. Yeah, that's the bull case. But that's, again, we have to hold above our recent low at 160. Let's just say 167. We need to hold above that. I talk downside in tomorrow. That's bull case. So bear case is, I'm going to pull up this view because it'll kind of help you visualize the cycle a little bit better. Is it this one? Yeah, daily. So I think today marks 28. Yeah, I didn't update it. So today is 28. Let's change that. And so this view supports that we have, what, another 3-ish days of sideways. Because in this cycle here, right, we had our big move up and then lots of consolidating, boring, nothing. Low was in on day 31. We began to explode. Today marks day 28. So let's say we fall for another 3 days. I'd look for this level right here at 162, where W and Y gain parity. But let's just talk like, I don't want to say worst case scenario, but, you know, worst case scenario would be like 158-ish, somewhere in that vicinity. Again, like, I don't really know. I have no idea. This is just like kind of forecasting the possibilities, but this doesn't really matter because once it starts to move, everyone will know. It's just really early to call, like, is it low in for sure? We had a really solid bounce here at this level outlined. The last ABC within the Y wave, the WXY, which is supposedly the final leg of the wave 2 correction. So again, it's all I'm looking for. If we're impulsive right now, is holding above this low at 167. So pull up an hourly again. Like, let's say tomorrow we come down, we're still correcting. It'll be kind of steep-ish. Nah, not even from like where we are now. That'd be like a what, like a 2-3 point drop down to like let's just say 169.5. Yeah, that's the bounce candidate. But now let's talk broader market, because I think one of the reasons why GME was down today, because, you know, the whole market got killed. Looking at this view, how would I even count this? I'd say like 1, 2, 1, 2, 3. I guess short term though, let's just, you know, into tomorrow. I'd say this is still, obviously this is, the S&P is bearish right now, but we did bounce, you know, this is similar to GME. I was saying how the 0.854 level, the blue level, you know, go back to GameStop, right? SPY basically bounced at this level here, like, you know, same idea. And so with that in mind, assuming this is like a corrective leg and a larger, or correcting, excuse me, assuming this leg is correcting, you know, upwards, because the trajectory, we're impulsing to the downside now. And so assuming we're correcting this, we'd expect, you know, a pretty green day out of SPY tomorrow. Obviously, if we break below today's low, then it's completely invalidated, but that would put upside at, you know, 436.75 on the lower end, and then 443 on the higher end. That's a lot of ground to cover. It's kind of bold to say that, but that's just, you know, Fibonacci and wave structuring right there. Right, so these would be upside targets before continuing to flush down. But looking at the VIX, you know, this is where I start to, concerned is the wrong word. You know, analyzing the VIX, I don't want to say it's pointless, because you can, it's possible, but it's, you know, it doesn't really, you can't really do real TA on it. So the VIX supports the idea that if SPY bounces tomorrow, VIX will come down and fill this gap, because basically VIX think inverse SPY. That's like the best way to phrase it. It's not exactly what it is, but it more or less that's kind of how it moves. So, you know, we look for VIX come down to 21.4-ish, fill this gap before, you know, continuing up, because I see this as like a flag pattern. Can't really do waves on the VIX, but it would be, you know, come back down to here before breaking up, and then SPY continues to break down. So actually, I think that about covers it. Actually, no, let's dig into the last structure a little bit more, just so you can kind of see how I'm doing my analysis. And so basically, I'm waiting for this type of structure to occur, right? You know, our few days of upside, consolidating, and then continuing to rip to the upside. Because the same thing happened here, right? Big upswings, sideways, and then boom. Next cycle, big upswing, sideways, boom. So, you know, I'm just waiting for an upswing, which would be a wave 1, downswing 2, and then 3 start to explode. But, yeah, that's where we're at. This, you know, this visual right here pretty much sums it up. This is the best way to look at it. Either way, whatever happens, you know, I'm zen. I don't really care what's going on right now. Don't buy options, but we'll see. You know, this is a pretty promising thing to see. We didn't wick below it. We bounced basically at the level and started to recover a bit, as did the rest of the market. So, we'll see. I think that covers about everything. I don't want to start talking too much nonsense. I guess we'll pull up the Qs chart real quick. Yeah, same idea, right? Bounce at a critical level. This is QQQ, so think NASDAQ, tech stocks, Facebook, Apple, everything that got killed today. This supports the idea that we could expect some sort of upside. Maybe not much, but you know, look at it all as a wave 1 down, wave 2 up, and you know, wherever we reject from here, that's when it really starts to get ugly for the broad market. But until that happens, stay zen, buy dips if we get them, ignore the FUD, stay the course, and I will catch you guys next time I make a video forecast. Peace.